folks, Dan Frio here, the rate update. Today is December 15th, 2020. I'm going to try to condense this down and just get you guys the information you need on what's happening to rates today, what I project for the rest of the week, and maybe a week or two out. Because if you're in the process right now, that's what you're worried about. You're building a house and you want a quote to beat what you got, or you want to see where you qualify, or you're looking to refinance and what today's rate. So does it really matter what 3 or 6 months is from now? I'll do other posts in regards to that. We want to condense it into what's going on right now and within the next couple days to couple weeks to keep you guys informed. And those many that follow, and please don't forget to give me a thumbs up. Subscribe down below, smack the button, and hit the bell so every time I do post a post, you get an alert. So what happened today with rates? This is a big topic in regards to realtors, home buyers, builders, even people in the mortgage business follow this. It's amazing how I get calls and emails from loan officers saying, Dan, where'd you get that data? Or what are you using for this? Or what are you using for that? So thanks everybody for reaching out. But what happened today with rates? Okay, you guys know, and I'm not going to beat this to death every day, but mortgage-backed securities were down 9 today. Sorry, I had 10 cups of coffee today. They were down 9 today. What does that mean, you guys? Well, let me just condense this to explain to you what this is for the newbies. We follow this bond. This bond is one of the biggest pieces or the biggest contributor to mortgage rates. It is a bond that trades on Wall Street. It's called a mortgage-backed security. And as it moves, it helps, or it is the factor or the tool or the investment that is tied to mortgage rates. So let's follow this. Let me just explain this number to you here quickly. What we follow is what's happening to the price of the bond. The price, not the yield. That's what these charts give us. So the yield is inverted, or it has an inverse relationship with the price. So here's what I mean. Is if the price of the bond goes up, which would be green on this chart, if that goes up, well, the inverse of that is down. So if the price goes up, rates go down. Flip-flop the other way. If the price goes down, what's going on with rates? Rates will go up. So that's what we follow here. And I'm going to show you what happened today, what news is coming out this week and might affect the markets. So we're going to look at the news, the trends, and some other things to kind of see where we're going through the end of the year and maybe into January. So let's get on to that. So this number right here is down 9. Not that big of a number, or not that big, not probably enough to really move the markets, maybe 0.1, maybe 0.2. We'll figure that out here in a minute. But that's a solid number. The stock market was up, I think, over 300 points today. So there's probably some profit taking in here, or not as much investments in here. But you can still see that there's a lot of stability in this market. There's not a lot of bouncing around. There was an anomaly right through here. I forget what happened on those days. Usually what's happening is everything is revolving around the stimulus package and the coronavirus. So as you hear the government coming out with stimulus, that's great news for the markets and everybody. You'll see everything rally. If it comes back and says, the stimulus package or the vaccines are doing no good, you have a reverse. Normally, in a normal market, what we follow is things like what's happening in the stock market, what's happening in the gold, what's happening in inflation, what's happening with the job numbers, what's happening with transportation, the GDP. There's a lot of things, if you have been following me for years, that's what I follow. Right now, that stuff was just kicked out the door. And what everybody's following, or the trends are based on right now, is the pandemic, what the government's doing to stimulate the economy, okay? And is there a vaccine coming? So everything else is kind of thrown out the door. In a normal market, we wouldn't see a pandemic happening, 30% unemployment rate, and the stock market hitting an all-time high. That is all built up because the government is stepping in and, I'll say, helping the situation right now. There's a cost. For every action, there's a reaction. What I mean by that is the government's coming in and pumping in tons of stimulus money. At some point, that money needs to be paid back. Think of it, if you go on vacation, you just spend a ton of money on credit, and you're having a great time. You're in Hawaii, you're fishing, you're sailing, you're doing this, you're drinking, you're partying, you're dancing, you're going out to dinner every night. It's a blast. And then all of a sudden, you realize, 2-3 months later, it's like, oh boy, my credit card bill came in. How am I going to pay that? And then reality sets in. That's basically what's going on right now. So take it for what it's worth. So that's what's going on there. So you can see what happens is the Fed is coming in and they're stepping in and trying to buy when needed to stabilize the market. And they've done a very good job here. So we really haven't seen anything there. I don't see anything in the news or anything else that should really give us any hiccups here. So let's go on to, what the intraday chart is. So how I kind of explain this part of it is, I always say, if you bought a stock for $100, or you own a stock, at the beginning of the day, it's $100. At the end of the day, it's $100. What did it do during the day? I guarantee it didn't go like this. So it went up and down and up and down. That's how day traders are making money and people are losing money. That's what I do for you guys. You might see, rates today are 2.875, and at the end of the day, are 2.875. Well, during the day, could we have grabbed 2.75? I can't if you don't have an application in, but let's see what's happened throughout the day. So we go to the Intra Day Chart, and let's break it down for the whole day. And look at that, okay? So this is actually, we didn't do anything today because, again, down, what does down mean? Down in price means up in rate. So we've been going down and down and down and down and down. I locked some people at the beginning of the day because I foresaw some of this happening. And if you're one of my clients, that I locked you in today, I probably shot you an email saying, hey, we grabbed it in with perfect timing. And then rates kind of, I'll say, petered out during the rest of the day. It really wasn't enough to really affect the markets, but I didn't know at what point this was going to settle in. That's where a lot of these lines come into effect. So going back to this chart, there's lines that we see that are up here and down here. These are called what's called Fibonacci levels. That's a ceiling and a floor. So we should be bouncing around those between those areas during the short term. And then we have other numbers, and you can see there's a line here that's purple, there's a line here that's black, and there's a line here that's brown. That is, the purple is a 100-day moving average, black is a 50-day moving average, and brown is a 25-day moving average. So if you average this stuff out, that's where these lines would put us at. Look, we're hitting right now at the 25-day moving average. That's where I'm saying we should be trading. And we're basically, for the past week and a half, that's right where we've been trading. We've been able to catch a few little dips on here, but nothing really that would stand out. Okay, so again, this market, it rates went up. Again, you got to follow me. As prices go down, rates go up. So rates were going up throughout the morning and then started stabilizing and came back a little bit. So we're not as bad as we were around noon today. Okay, so that's that. Stock market ended up 337. Really no major news that came in today that it would affect anything. Some of the news that came in was the manufacturing index, which you see was down almost 1% from what the consensus was. That's not good news, guys. Import prices year over year, industrial production. So these numbers right here, import prices, they're going to show us or give us an indication of what's going on with inflation. Now, as inflation heats up, that's bad for bonds. Let's leave it at that. So the consensus vote was import prices were going to be up 0.3%. They were only up 0.1%. That's good. Year over year, right in line. So nothing shocked us there. Industrial production month over month, we were up 0.1% than what we expected. That's good news. But all in all, there's really nothing here that was a surprise. I guess I'll put it that way. Then we're getting into more sales numbers. The Federal Reserve is meeting tomorrow, and they'll come out 1 o'clock Central Time, 1 p.m. Eastern. Once they post, I will post an alert out to say what they did. There is nothing expected from them to do really anything. And then the rest of the week is going off of jobs and so forth. Again, guys, it's also becoming a holiday season. A lot of people are going to start taking off, and working part-time, and people are starting to get in holiday mode. Myself as well. So, take that for what it is. What happened today? So I posted this chart as well. It goes over, this is a chart of where interest rates were for the year. You can see we started the year, or for the past year. So most rates at the beginning of the year was at 4%. Look where we are now, 2.8, 2.8, 2.8, 2.4. If you look over here, we're almost 1% lower. So let me explain to this. This is where a lot of people get confused. 100 basis points, 100 BPS is 1%. So 100 equals 1%. So 85 basis points equals 0.85. Okay, so you get that. 1 basis point is 0.01. So 1, 3, 2, these numbers through here, they're really irrelevant. I'll put it that way. So this goes over what the average throughout the whole country, what rates are on average on 30-year conforming, 30-year jumbos, 30-year FHA, and 30-year VA. And you can see those numbers right here. The one-day delta means what the change. Delta means change. What have they changed over the last day? 1 means they went up 1 point, or let me go back. 1 basis points means they went up 0.01. So like I said, really nothing. So these numbers you could see, because of the market the way it did today, there was really no change. Over the last 7 days, the delta, the change, is 1 basis point, 3, 2, and 1. So again, nothing there. Okay, so I don't expect anything there. A new chart that we're watching, this gives me a different coupon. I won't go into what that is, but there's a whole bunch of tools that I use that I don't really, that I use in the background. This is also the MBS market, but a different coupon. I won't explain that, but it's basically, it was stagnant for the day. It was at 0. So that's why you really haven't seen much change at all in the markets. Headline news is, what exactly might the Fed do or say tomorrow? I'm not expecting them to do anything other than to say they're on top of it. If everything gets worse, they'll jump in and do what's needed. I hate to say it, they've been doing a fantastic job of what they need to be doing, and they're doing it. So now let's get on to what my rates are for today. My rates really didn't change. There was only one cell that changed, was the cash out piece. So let me go through this. And I went through yesterday, if you want to learn about how interest rates work and what we call loan level price adjustments. I did a big tutorial video yesterday. I'll try to tag that down below. But what determines mortgage rates is the bond market that we just went over, plus what we call loan level price adjustments. What loan level price adjustments are, it factors into your mortgage rate, good or bad. So let me explain this to you briefly. What's a loan level price adjustment would be, let's say, your credit score. The lower your credit score, the higher the rate. Okay, that's a loan level price adjustment. So based on if you have a 650 credit score versus a 740, you're going to get a higher rate because of that. Loan to value, that is the loan amount divided by the value of the property. The lower the loan LTV, the better the rate. Meaning the less money we have to lend you on the value of your home. Less risk for us, better rate for you. So let me flip it around. The higher the loan to value, the higher the rate. Okay. Also, what kind of property is it? A single family home, a PUD, a condo, a 2-flat, a manufactured home, a modular home? A single family primary home is the best rate in town. A 4-unit building where it's an investment property and you're cashing out will have a much higher rate than the other one. So what I try to do in a lot of videos is explain to you there's not just one rate, but to post one rate just to give you a guideline on where my rates are, so I can show you that I'm with the market and I beat most. I had about 5 loan estimates come in today. On average, I was 0.125 lower in rate across the board, and I was saving probably each customer over about $2,000. So if you want a little bit lower rate and save yourself $2,000, love to help. And I was, I think, 5 for 5 today personally that I did. So let's get back to my rates. So what I broke down here is these rates are based off a $250,000 loan, single family home that is your primary residency. Okay, then I broke it down to credit score, loan to value, and term. What I also did was broke it down to if the loan is if you're purchasing the property or doing what we call rate and term, meaning we're just refinancing your current balance, you're not taking out any additional funds. If you're looking to cash out, then that's down here. That's a little bit higher risk for us because we're increasing the amount of loan on your property. Thus has a little bit higher of a credit or a interest rate. That is, again, what would I reference? Loan level price adjustments. So based on all of this, let me explain the loan to value for you. Basically, LTV means loan to value, the loan amount divided by the value of the property. So if you have a $100,000 loan amount, $200,000 value, 100 divided by 200 is 50%. So that's how you calculate loan to value. So right now on our conventional program, purchase rate and term, 740 credit score, 80 LTV, 30-year fixed rate. My rate is 2.75 with an APR of 2.835. If you're looking to cash out, anything, if you pay off your mortgage and then get money back or pay off any credit cards, it's considered cash out. Basically the same criteria, the rate on that is 2.875, okay, with an APR of 2.993. Now, we go to, just to show you guys how there's a difference in the rate because of the term. Look, my 30-year term with this criterion, the same criteria is going to apply to the 15-year, so 2.75, but if you go to a 15-year, that rate is 2.375. Okay, the criteria is exactly the same, but you're shortening your term, meaning I'll get my money back quicker, so that's less risk to me. So we're offering a lower rate. So my 15-year term right now is 2.37, APR at 2.57. If you're looking to cash out, again, cash out normally has a higher rate because you're pulling out cash. The rate is 2.62. Okay, now to the government programs. These are government guaranteed loans. They're FHA, VA, and what we call USDA. You don't have to buy a farm if you're looking to do USDA. We have a lot of Google campaigns and Facebook campaigns actually out in California that we're reaching out to people that can get $600,000, $700,000, $800,000 loans at 100% financing under the USDA program. So if you're contemplating, hey, does my property fit the USDA program? Just reach out to us. We'd love to put in your address and let you know, get back with you and say, yep, the property fits. Now we just need to make sure your income fits the guidelines. Those two do. You can get 100% financing. I put in here 740 credit score. We do these loans all the way down to a 600 credit score. But USDA, the property and your income has to fit USDA guidelines. But you can go to 100% loan to value. So meaning you could buy a property. We're doing several right now at $600,000, $700,000, $800,000 at 100% financing. 2.375 is the rate. 30-year fixed, no points. Okay, phenomenal. The next is a VA. If you're a veteran, you could qualify for 100% financing. Again, we have credit scores down to 600. But a VA, you can purchase or refinance up to 100% loan to value. The rate on that is also 2.375. If you don't fit these criteria and you're looking to buy a house with the minimum down of 3.5%, you can go with an FHA program. That with a 740 credit score, you can do a purchase or refinance. That rate is also 2.375. So we would love to discuss any of these programs with you in further detail if need be. Just call or email, please, and I'll give you that information at the end. Now, the programs that we're known for throughout the country is our jumbo programs. We have jumbo, super jumbo, and then a boutique program. I'm just going to go over our super jumbo program because it basically has the same guidelines and the same rates. You get up to $5 million. Actually, this loan to value, we can go up to 75%. Loan to value, but I pulled out the 780 credit score at 60% loan to value up to $5 million, 2.875 30-year fixed rate, no points. Crazy. Now, here's a boutique program that we have in these counties in California. We can go up to 95%, what we call loan to value, up to $1 million. So you could buy $1 million home and put down 5% with a 780 credit score in these areas right here, get a 3.5% interest rate with no points. The norm on a jumbo is about 20% down. Okay, so in this case, you're buying $1 million home, 20% down is $200,000. We can get you in there for 5% down. So $50,000 versus $200,000. Huge difference, guys. So that's my rates for today. So if you like what you see and you're like, Dan, what I need to do, how do I get a hold of you? Few ways. I'm going to show you that here in a second. You can call me. You can email me, or you can do everything online. So let's get to it. Let me show you where to go on the web. You're going to go to therateupdate.com. Scroll down to the bottom. There's my 800 number. It's a free toll-free number, 800-775-5626. Follow us on any social media. I'd love to hear from you. I'd love for you to follow us. Up here is my name. My name is Dan Frio. You can reach me at D for Dan Frio, which is Frio, at preferredrate.com. That's my email address. Or you want to just go to the website and get the ball rolling, click here. Click the Apply Now button. Work your way through. It will take you maybe 5 minutes. At the end of the session, it'll ask you, based on the questions that you answered, it'll say, we need a copy of your mortgage statement, your pay stub, your something. You can upload those securely in the system. It'll come right into my system. Probably within an hour or two, we'll review your application, give you a call, and go over the scenario with you. We need to talk to you guys. If you prefer just to email, that's fine as well. But we have a lot of people that apply online, then we have a tough time getting a hold of you. We're here to help. Hopefully you took the time to complete the application. Get back with us, or even if you don't need our services anymore, just say, hey Dan, I appreciate everything you guys did, but you don't need your help right now, because then we can move off to the people that really truly need our help. But I hope you need our help, because we're here to help you. There are other tools here if you want to go through. If you're looking to purchase a home, you can go through this questionnaire right here. Again, it's questions that kind of prompt you to say, okay. But it's also, you're filling out an application. You kind of don't even know it because you're answering questions that are relative to us. This tab here does the same thing, but for a refinance. And if you want to just get a free quote, basically you'll just put in a little bit of information in here. And this is basically telling us we need to call you just to go over and answer any questions that you may have. So that is it for today. I want to thank you guys for watching. Please don't forget to give me a thumbs up, subscribe down below, hit the bell, and I will see you tomorrow. Same time, same place. Take care.